So just looking at the futures here, pre-market, NASDAQ up a cool 2%. Utah, give me 2. All right, looking good. S&P up 1.2, NASDAQ up 2%, Russell up 0.4. Just spot checking the other percent moves here, pre-market. Interesting that the 10-year is below our support level. I am okay with it, provided that the 2-year also accompanies lower, which I don't get real-time 2-year yield quotes, so those aren't up to the second. But right now it looks like we're rolling at 23 basis points of inversion. Believe it or not, a simple place to get your 2-year quote is just go to CNBC and then markets, bonds. So the 2 years at 4.33 and the 10 years at 4.15. So that's 22 basis points roughly of inversion. So not much has changed there. But, pretty good move down in yields. Dollar is nicely lower. So I like to see that occurring because that is, a typical expected macro relationship. And with dollar down, yields down, stock futures up, that all makes sense. And I'm going to hope, I haven't looked at the price of gold yet this morning, that gold's up. Is it? It is. It's up 0.5%, which is nothing crazy. But, I'm starting to warm up to gold here. It's an ugly way for consolidation. I played around with it a little yesterday, and okay, I guess we can go with it. It's this whole gold thing is weird from October lows with this clear 3-wave move. I thought about going truncation here with 5, ABC down in 2, and then the same thing, 3, 4, or if it's 1, 2, 1, 2. It's a little unclear on that, but that's all right. But regardless, I think the correction's starting to come to an end, and we should be able to finally move up to 2,700. As I said, gold moving up is fine. It's a confirming macro indicator to lower rates, lower dollar. Those two formerly mentioned macro markets produce higher stock market prices. Therefore, gold and stocks are trading together. So it's fine to have gold, but if it's going to go up along with the stock market right now, where's going to be the better percent return and risk-adjusted returns? So we have another 10% to we're up into resistance in gold. Can you get 10% from a couple high-flying, high-growth stocks? Absolutely, right? And that becomes a similar question with Bitcoin. Bitcoin, it's great to hold it for long periods of time and to be right on the macro narrative and fall in love that everything Bitcoin stands for. But, if I were to pull up the Bitcoin and crypto wave counts, like, okay, we're at 70,000. We have 100, 110,000 upside target resistance. We know that's a wave 5 resistance. Like, okay, so we have 30% return. Like, okay, it's nice, but, are there other places where you can get a 30% return with less risk? And the downside is more significant. So just, I just pointing it back, like Bitcoin's great to go higher with stocks. Gold's great to go higher with stocks. And, I know I'd love to buy into the whole narrative and theme of how Bitcoin is going to change our e-commerce, online e-commerce, and the way we transact. And there's a finite supply, and it's great. But I'm just trading what's happening on the hard red edge of the chart, rather than what I want to be a reality in the future. Just thinking about where's the easiest way to make those returns. So just keep that in mind.
Hi, it's Todd from tradinganalysis.com. Thanks so much for watching. Listen, my team and I have so much to share with you in terms of our technical analysis, our fundamental analysis, portfolio management tactics, trading in and out, maybe options, sector rotation. Let us know what's most interesting to you. Maybe drop that in the comments section and we'll do our best to work it in. Also, consider clicking the subscribe button and the bell icon to be notified when we put out new videos. And finally, you can check us out at tradinganalysis.com if you'd like to see us manage our real portfolios in real time. Thanks again for watching.